Hello and welcome to our petty cash journal entry practice exercise. In this exercise, we're going to be going through some of the various journal entries that you normally would expect for one of these types of problems. We're going to see the initial setup of a petty cash fund, the replenishment of the petty cash fund, changing the level, and then closing the fund out. So notice that with this particular template, I have, if you go down to the pull-down menus for the accounts, you'll see the various account names that you need. You can also see them on the right-hand side of this particular template. And then, of course, you'll need the amounts. Now, notice that there are a variety of rows for each of the exercises. You're not necessarily going to need them all. It just depends on what that question is asking for. I just wanted to make sure there's at least enough for your entry, but also enough to make sure there's a little bit of challenge there, so you need to know whether to debit or credit that particular account. So that's what we have going on here. So let's go ahead and take a look at this. Joey's Dojo created a $400 petty cash fund. During the month, there were a variety of transactions that were reimbursed from the petty cash fund as follows. So first of all, they spent $25 for stamps. It's going to be recorded in postage expense. They spent $45 for fuel that would be recorded in fuel expense. So those are two expenses. But then C, they spent $75 for office supplies. Now this is going to be an asset. We're not expensing this yet. We're debiting the office supplies asset because we have more supplies that we can use now. Then we spent $125 for delivery fees. We're going to debit the delivery expense account, and we'll see that later. We're going to increase the delivery expense account. So first of all, let's take a look at number one. We're recording the journal entry to establish the petty cash fund to the desired level, which is $400. Now, petty cash is an asset, just like a regular cash account. What we're basically doing with this journal entry is we are increasing the petty cash and decreasing cash. We're moving money from one asset to another. So to increase the petty cash, we have to debit petty cash for $400, and we have to credit the cash for that same $400 to move the money out of there. So this is called the initial setup of the petty cash fund. Now let's take a look at number two. We're recording the journal entry to account for the various cash transactions throughout the month, and we'll get to this whole $120 issue in just a bit. But first, we're going to handle the various cash transactions. $25 for postage expense. That's what we're recording there. So we have to debit postage expense for that particular amount. We have $45 we're expensing for fuel. Fuel expense is what we're recording there. So that was $45. $75 is going to be office supplies that we're purchasing. So that's $75. And this one's a little bit different. It doesn't go into the expense account. It goes into the office supplies asset because we're now adding to the amount of assets we have on hand. We'll use them later up, and that'll be an adjusting journal entry down the road. Then we have $125 for delivery fees, and this is going to be a debit to delivery expense. So we're debiting the delivery expense there to record that. Now notice we have a fifth row for the debits. We'll come back to that a little bit later. We'll see what that's for. Now with the replenishment, which is this journal entry is called the replenishment entry, we only have $120 left. We need to replenish it back up to the $400 level. So if we only have $120, we need to get to $400. That means we need $280 to put back in the petty cash fund, and that's coming out of cash. So we credit cash to reduce that, and we're pulling the cash out of the main cash account. Now notice we didn't debit petty cash. We don't do anything with actual petty cash, that account, in this journal entry. Instead, the debits went to the various expenses, or the asset in some cases. Now we needed $280 to bring us back up to a $400 level. That's the important part here. But remember, a main rule in accounting is that we have to debit and credit for the same amount. So all of our debits have to equal the same amount of all of our credits, so we need $280 in debits. The problem is, if you just do a quick little addition here, we only have $270 in debits. So we're short $10 somewhere on the debits. And the key word there is short. What this basically means is if we only spent $270, if we truly only spent $270, we would expect to have $130 left in cash. But we don't. We only have $120. Something happened to that additional $10, whether it be we had another expense we didn't record, whether we gave somebody too much money or didn't get enough back. But for some reason, we're $10 short, and it's going to go to the account known as miscellaneous over and short. That's just the name of the journal entry there. Now we have our $280. Now this account, when it's on the debit side, it acts kind of like a miscellaneous expense account. When it's on the credit side, about the closest thing you can call it is kind of like a miscellaneous revenue. But really, we don't expect this account to be too large on either side. And if it is, then we have a control issue. But that's outside of this particular discussion. For now, we're just looking at the journal entries. Now, number 3, at the end of the month, Joey decides to increase the petty cash fund up to a $500 level instead of a $400 level. So we need an extra $100. Now, this is an increase of a petty cash fund, not a whole lot different than what we did at the beginning when we started with 0 and increased it up to $400. It's still going to be a debit to petty cash and a credit to cash. For $100. Now, this could go the other way if we were decreasing the cash account. Maybe we wanted to go from $400 down to $300. Then we'd reverse the debits and credits. Pull money out of the petty cash fund and into the cash account. So this is the changing level entry. Number 4 now, we are actually closing the petty cash fund out altogether. So in this case, we're putting money back into the cash account. Now remember, we're starting at we were at a $500 level after the last entry. So we're closing it out. So we need to increase our cash by $500 because of the fact that we're decreasing our petty cash by $500. In other words, we're taking the money out of the safe, the petty cash safe, whoever has that, and we're putting it into our main cash account. And that takes us through really any journal entry that you should expect to see for a petty cash type problem, all the way from the establishment of the fund, the replenishment of the fund, changing the levels, and then closing the fund out. So hopefully this helps you when you're dealing with one of these types of exercises. But I thank you for your time, and I look forward to seeing you in our later sessions.